So it's been about 15, 16 months that we brought this product to the market.
Looking at, is everything is done properly.
So I can explain the intricacies of this product. So for the complexity of the transaction, thank you, Ashish. And I don't know how to start this, but I can quickly introduce myself and the company. So we started this company about 2 years ago, and we came into the market, launched our product, and started marketing it. I think about 15 months back, last year, June or July. So it's been about 15, 16 months that we brought this product to the market. This is an investment product, basically. This is a platform where we can buy or make investment into pre-owned life insurance policies. And the uniqueness of this product is that it offers fixed returns, and there's a very clear arbitrage against the other fixed income instruments like fixed deposits, debt mutual funds, PPF, etc. So we offer returns almost in the range of 12 to 14%. CAGR, which is XIRR, and which probably with the safety of the insurance policies underlying beneath this product, this is a great investment option or avenue for people who are looking at risk-free, high fixed income on their investments. So far we have done about 50 to 60 crores of such policies. I mean, we have made people invest almost 50 to 60 crores, and looking to double or quadruple these numbers in the coming months and the years. So I can explain the intricacies of this product as the session progresses. But how do you want me to do that? Shall I take the entire session?
Thank you, sir,
So
for the introduction. I request
uh,
Rohan to now proceed with their questions, and then we can proceed in a way where Rohan can ask a question and we can answer that briefly whatever way we can explain the product.
Sure. Rohan, over to you.
Thanks, Naveen, for being on this webinar. As a platform, Random Times, our endeavor is to try to bring new alternative investment products to the investors. They give them an opportunity to understand these products, and then these people can make informed decisions while investing in these products.
Yeah.
So before I start with this product works, could you give us a brief background about your journey? As an entrepreneur, how you started this product. Why did you feel that there's a need for this product?
Yeah. So quickly, I've been into this. I've been an entrepreneur for the last 10, 12 years. And before turning entrepreneur in 2013, I was employed with companies like Hotel, Citibank, and G Capital. That's where I spent about 15, 17 years. And then in 2013, I turned entrepreneur. In the last 10, 12 years, I've had about 4 or 5 startups. All of them are working at a decent levels. And this is the latest one that where the ideas dawned upon us about 2.5 years, 3 years ago, which we worked upon and finally commissioned and incorporated the company in September of 2000, July of 2022. The idea came from another work that we used to do for many insurance companies, where we would remind the policyholders about their renewal payment obligations. Wherever they fail to renew the policies, these policies would lapse and would yield them almost zero returns, while also not being able to give them any protections on their life. So we thought that if we can revive these policies by assigning these policies to another person who would be able to not only pay the past premiums, but also be able to continue to keep these policies alive or in force, as they call it. And this would provide the new investors or the people who would put in money into these policies with a clear investment option, which gives them around 12 to 14% returns. Also, ensuring a life insurance cover continuity for the policyholders. So, there are millions of such policyholders in the country today across all insurers who are not able to renew their policies because either they don't have the money or they don't want to renew it, and these policies are lying idle. And these policies, I was just stating that there are millions of policyholders with millions of policies which are lying in the lapse bucket, which are not renewed. And therefore, it presents an opportunity for the investors who can now take up these policies and in return get an investment option which gives them an XRR of about 12 to 14%. We can explain how it happens, but this is where the idea came from, and this is how I started it. I spoke to my co-founder of the earlier ventures, and we got some angel funds. We built the platform, and we brought the product to the market last year in the month of June.
Thanks, Naveen, for this information. So, who are the different stakeholders in this marketplace? At a very high level, could you explain, how this product works? Because most of the investors, they are generally used to very conventional investments like, bonds and stock market and voice discounting. But this is a totally different asset class. So, if you could give us some information on how the process works.
Yeah. So, as you rightly mentioned, this is a different asset class. This is a little more, I would say, complex than the straight investment products like fixed deposits or PPF or government securities. But, it provides an alternative option to the investment world where they can earn 12 to 14% with the safety of a bank deposit. Okay. Now, how does it work? There are three stakeholders in this entire equation. One is the policyholder who currently holds the policy, but he's not renewing it. The policy is lapsed, okay, because the renewal premium is not paid. The second stakeholder is the insurance company, which wants the customers to continue and do not attrite. They don't want their customers to go away. They want their policyholders to keep renewing their policies. So if the policy does not renew, it's a loss for the insurance companies. Most of the insurance companies spend quite a hefty sums to be able to get to their policyholders and remind them about their payment obligations and actually make them pay, and they point various agencies, various telecalling partners to do this activity for them. So they want the policies to continue. The policyholder does not want to renew the policy and hence is not paying. And the third stakeholder in this entire equation is the person who will now become the owner of the policy. See, an insurance policy is also an asset, okay? Just like a fixed deposit or a security or a stock or even a piece of land or gold, it is a security, okay? It is an asset which you can sell and somebody else can buy, okay? So there's a provision in the Insurance Act under Section 38 which provides the option to the policyholders to assign their policies in favor of a third party. Okay, that third party can be their family member or can be an outside person. Okay, and this third party can be an individual or can be an HUF, can be a trust, can be a company, can be a private limited company, or can be anything, right? So this is how it is, and we use this provision of Insurance Act, which is Section 38, to assign these policies in favor of assign in layman's language is the transfer of the policy. I sell my policy to you, you become the new policy owner. Because these policies are transferred or sold or assigned at a value which is lower than the amounts of premium paid. The surrender value is always lower than the amounts of premium paid, and hence, it gives the option to the investor that he buys the policy at a discount. For example, if a policy has paid 4 premiums of 1 lakh each, the surrender value after 4 years of this policy would be, let's say, about 2.5 to 3 lakhs. Now, if you buy a product worth 4 lakhs at 2.5, 3 lakhs and continue with the future premiums and then take it down to the maturity and then take the maturity value, your IRR stands to be higher than the base product IRR. And hence, it provides the option to the investor to earn anywhere, as I said, between 9 to 12 to even 14% on such policies. And these policies are absolutely secure, absolutely safe. The insurance companies are adequately capitalized. IRDAI monitors them, and these insurance companies are as safe as the banks are. So this is a safe investment option without any credit risk, and it yields the investors a much higher, a much attractive return. While and the other advantage to the investor community is the assignee, is that these investment and these insurance policies are tax-free also. Unlike the fixed deposits, where the returns are are taxed at your prevailing income tax slab. Here, the tax rates are much more favorable, either zero or at max it will be LTCG of 12.5%.
And thanks Naveen for the detailed overview of the platform. I think one apprehension a lot of investors like me generally have while going for the alternative spaces. Is it regulated? What will happen to my money? Because when they're investing in mutual fund, they know there's a SEBI, there's someone who's looking at is everything is done properly. And I think many of us had bad experiences, so they're a little cautious when they're venturing into a new asset class. So in this case, how is it regulated? How is the money safe, both in terms of regulation and in terms of the assets? So can you throw some light on that?
Sure. So this entire space is regulated by IRDAI. All these policies are assigned as per the norms laid out by IRDAI, okay, which is the regulator for the insurance companies. Just like the SEBI is the regulator for investment world, RBI is for banks, IRDAI is for the insurance companies. So this is done as per the IRDAI norms, and the policies are assigned, uh, in favor of a third party by the insurance company. We just provide a platform for doing so. The job of the fair value is to identify such policyholders who are willing to assign their policies because they are not able to pay their renewal premium. So we identify such policyholders, we speak with them, and we provide this option to the investors to invest in these policies. The space is regulated by RDI. The process of assignment, the transfer of the policy is done by the respective insurance company. And the assignee, the investor, will now get a new policy bond, which is assigned in his favor, in his name, and he becomes the policy owner. This policy assignment is absolute policy assignment as per the Insurance Act, and this is irrevocable. So once you become the new policy owner, which the investor becomes a new policy owner, insurance company pays everything related to that policy to that new owner of the policy. Okay, so this is as safe as that. You get a policy from let's say ICICI Prudential or Max Life Insurance. You can be very very well assured that whatever they are saying will be the maturity value of this policy that will come through.
Thanks, Naveen. There is a product called PTC, Pass-Through Certificate. What is this product and how is it different from the normal investment product we have on a policy exchange?
Yeah. So PTC is a product which we designed out of these policies. When we went to certain high net worth individuals or people who would want to invest in such policies, some of them came back, said that we would want to invest a more relevant sum. Somebody came back, said 10 lakhs, somebody is 50 lakhs. If somebody comes back to us and says, I want to invest 5 crores in this. Now, for him to invest 5 crores, he will have to buy a bulk of policies. The average ticket size here in our case is about 3 to 4 lakhs. Now, to buy 2 crores or 5 crores, you will have to have at least 100 plus policies. Now, it becomes cumbersome for the investor, to buy or to do the documentation of 100 policies and then keep tracking them to the maturity. It becomes cumbersome. So what we designed is a securitization trust. We took the legal advice from the top legal experts in the country, and we created a special purpose trust, which is securitization trust. Catalyst manages that trust, and Catalyst will buy all such policies. Let's say Catalyst will buy 500 policies worth 20 crores, and Catalyst will create bonds out of those 20 crores value, let's say of 50 lakhs bond and 40 bonds and worth 20 crores, and Catalyst will issue those bonds. The policies will sit beneath those bonds, and it will be easier for a person to buy 3, 4, 5, 1, whatever number of bonds that one wants to buy. It will be much easier. So for the ease of the investor to invest in this asset class, we created this structure whereby we are issuing the PTCs. Imagine if somebody wants to invest 5 crores in a mutual fund, it'll be much easier than buying 100 policies. So for the complexity of the transaction, to remove the complexity of the transaction, we created the PTC structure through the setup of a securitization trust.
And what are the returns and minimum investment for this product, PTC?
So PTCs are the face value of the PTCs. We have had 4 trusts so far. The 5th trust is going to be launched very soon. We kept the face value of one PTC anywhere between 20 lakhs to 50 lakhs, depending upon which trust. I mean, we first came out with 50 lakhs bond, and then we said, 50 lakhs maybe is maybe too high. Then we reduced it to 25 lakhs. We again want to go back to 50 lakhs so that, it is one ISIN per PTC. It will be much easier to manage that. So to answer your question, 25 to 50 lakhs is the face value of one bond.
Okay, got it. And the returns for the
Returns are so far in the 4 trusts that we have closed so far, we have committed a return of 13%.
Got it.
And with the investment time frame of anywhere between 1.5 to 2.5 years.
Got it. Got it. So I think before we move on to questions, I have one question. Is there any risk for the investors in terms of, let's say, if tomorrow, maybe if your platforms stop doing business or anything which people should be cognizant of before investing?
There's no risk of investment going kaput because you have invested in the insurance policy of a particular insurer. Okay, we are nowhere in the picture. We are just like a broker. If you buy Reliance Industries ka stock, through Motilal Oswal or through Anand Rathi, tomorrow if Anand Rathi shuts down, Reliance will still go on. So it is just like that. So insurance company will pay the proceeds at the maturity or at the time of liquidation of the policy to the investor directly or to the trust through which it will be paid out to the PTC holders. We are nowhere in the picture.
Got it. Got it. Mhm. And I think one final question before you can answer the question people have asked. What are the future plans for Policy Exchange? Are there more partners in the pipeline, new products? So if you could, tell something about that.
So as we came out with this innovative product, we'll creating many variants of such investments. For example, first we came out with the individual policy investments, then we created a PTC out of that, and now we are trying to create few more options, which are equity linked or which are, till now what we have done is completely secured guaranteed returns. We can do equities as well, where the advantage will be clearly in terms of LTCG, because these policies, which are issued before a certain date, February of 2021, are all tax-free, which are ULIP policies. So we'll create a product out of that. We'll create a platform for the mutual fund investments. So there are many products which are in the pipeline, and apart from Max Life and India First, with whom we have the tie-up to provide such pre-owned insurance policies, we are working with our sales team to get 4 or 5 more insurers over the next 4 or 6 months to start offering such policies through us to the general public.
Thanks, Naveen. Ashish, could you just go through the questions?
Yeah, sure, Rohan. Thanks, Naveen, sir, for generously answering all the queries put up by Rohan. Now I'll be taking questions which are being asked by our participants.
Please.
So the question is, are they entitled? Are investors entitled all benefits when assigned? Does the original policyholder have any rights after assignment?
In case of absolute policy assignment, which is the case with us, when we do the assignment, it is the absolute policy assignment. The original policyholder ceases to have any right whatsoever on the policy. The new owner of the policy is entitled to all the benefits, including bonus payment, maturity, even the death benefit, as per law, is with the new policy owner.
Now, second question from Mr. Sudhanshu is, how can return be fixed as most of the policies are ULIP and market dependent?
Because when we do the assignment, and because we want to guarantee a certain return, we move the entire fund value into secure product, which offers a fixed 8.5% returns on the fund value. And we delink the policy from the market fluctuation by moving everything to secure. And hence, we are able to guarantee that.
Okay. Any policy transfer or specific policy? Probably he meant whether we are honoring policy from any insurer or from a set of insurers?
No, this is our standard product. This is our standard practice that when we do the assignment, along with the assignment form, change of ownership form, which is sent to the insurer for the assignment, we send a request which, whereby the funds are moved to secure. Otherwise, market fluctuation, in case the returns go higher than our promised returns, investors will be very happy. But there can be cases where it can come down and we'll be held liable. So we'll not get the credit, but we'll get the uh, brickbats. So we don't want that, and hence we first move everything to the secure. And in case investor wants to then take risk with his investment, once the policy is assigned, he's free to do that. But then it is his own risk. See, once you become, let's say as an investor, you become the owner of a new policy, a policy that you have bought through assignment route from us. The policy is assigned to you. You are the new owner of the policy, and you can do whatever. You can move it back to equity. You can move it to hybrid. You can move it to balanced. Once you do that, it is all up to you. But right at the upfront, when the policy is assigned, we move everything to secure.
Thank you, sir. Mr. Sudhanshu would like to know what are the tax implications in this industry?
Tax implications on, so it is the word itself, when we use the PTC word, pass-through certificate, it means that all the benefit of the policy are passed through, which means that policies which are tax-free, which are issued, the ULIP policies which are originally issued before February of 2021, they are all tax-free. The policies which are issued after February of 2021, they are taxed as per LTCG rates, which earlier was 10%, now 12.5%.
Okay. Mr. Kumar is asking, medical condition of original insured and investor may be different, which means risk that insurance company attaches to policy will be different. How does it work when policy is transferred from original insured to an investor?
So in this case, if the policy is, when the policy is originally issued, there are medical tests done, and there's a mortality risk attached to a policy. But when it is assigned, the policy is lapsed. Okay, so there's a policy of revival that the insurance companies follow. The policies relate to either the health declaration form filled by the original policyholder, who's the assigner, or the medical tests conducted by the insurer to reassess the mortality risk of the policy of the person insured. Once they do that, so the policy is assigned. After having satisfied themselves, the insurance company will assign the policy in favor of the new assignee, the investor. Even for the sake of argument, we assume that the policyholder, the original policyholder, dies and there's a claim raised. Our investors are protected to the extent of the original policy investment and the returns thereof. So if we have promised a return of 13%, the sum assured will be divided by the insurance company in such a manner that the investor original investment and returns are protected, and the residual sum assured then goes to the nominee of the original policyholder. So the investor's rights are all protected. His investment is protected, his returns are protected. So there's nothing to do,
Thank you, sir,
with the mortality risk.
The next, Shiva Kumar would like to know, does the new investor have her life covered as well to the surrender value in assignment?
No.
Okay.
It is just an investment product for the investor. There's no life insurance.
Okay, so now Mr. Tej wants to know, when does an investor need to exit this product after assignment? Does he need to intimate to the insurance company that he wants to exit after the lock-in period?
He can do it either ways. He can go either directly to the insurance company, surrender and get his proceeds, or he can use the services of fair value. Just tell us and we will help the person to help the investor to liquidate the policy and get his money in his account.
Okay, so in nutshell, the investor is the ultimate owner of the policy. He can
absolutely. He can walk to the branch of the insurance company. He can walk to the office or the branch or to the website of the insurance company, or go through us. There are multiple ways in which it can be surrendered. We offer services whereby we intimate the investor that your policy is now due for liquidation. The lock-in period is over, And hence, would you want to liquidate that? In case he says yes, within a few days, 3-4 days, which is a turnaround time, he gets the money in his account.
Mr. Tej also wants to know, can an investor get more than guaranteed return that what is expected at the time of the assignment, because the secure fund may be GSEC, which may give higher return depending on the bond market?
Absolutely, yes.
Is the tax treatment same for an individual investor when buying policy directly rather than a PTC structure?
Yes.
Okay. And Mr. Sudhanshu wants to know, will IRR change if market goes up and down during the policy assignment?
When the deal is struck with the policyholder that he is willing to get out of this policy at a certain value, which is a certain discount to the fund value, and we take, let's say, 10 days or 15 days time to assign this policy, and the fund value goes up or down, the returns marginally can vary. When we say 13%, like for example, in the last 6 months, when the markets were on the ascendancy, our investors have experienced high returns. We promised 13, they got 14 and 15 and even 17 also. But in the scenario when the markets are falling, we would want to adjust the fund value to the latest day of the transaction. Okay.
Okay.
For example, today I struck the deal with the policyholder that against the 3 lakh fund value, he is willing to get out at 2 lakhs. Okay. And tomorrow, when the policy is assigned, the fund value has already gone up, let's say by 10,000. So it has become 3 lakh 10. He gets the policy at 2 lakhs. So that 10,000 would be the additional return to the investor. But in cases where it comes down to 290, we will check at the time of assignment, at the time of payment to the policyholder, and say that since the fund value has come down, therefore your payout can also come down. But yes, you are right. During the time that it takes to assign the policy, the fluctuation in the fund value can increase or decrease the returns.
Are there any significant hidden charges at the time of liquidation the policy after lock-in period ends, which can profoundly affect fund value and hence returns?
No.
No hidden charges.
No hidden charges. The fund value is paid 100%. There are no charges deducted that time, neither by fair value nor by the insurance company.
Thanks, Naveen sir, for patiently answering all the questions. We have come to the end of this session. Rohan, if you have any closing comments, probably go ahead.
Yeah, thanks, Naveen, for answering so many questions and explaining in detail about the product. I know that people will have more questions. After going through this video, they will also have follow-up questions. Probably I can collate all those questions and send it to Ashish and get those answered. Second, I think for specific products like PTC, we can maybe have a detailed, recording in the future where we can talk about, how the product works, the mechanism, the legal aspects. So probably maybe in the next video we can do a cover PTC, and I'll share the recording with all the investors, all the readers. And thanks, Naveen. This was very this session. Really helped us in understanding more about this product.
Thanks,
and
Rohan.
All the best.
Thanks a lot for organizing this session. I'm so thankful to you. I'm sure this recording will help your investors subsequently, but we are always available to answer all your queries and questions whatsoever are there.
Thanks, Ashish.
Thanks.
Thank you, Rohan. Thank you so much.